You ever feel like you're trying to read a hidden language when you look at the market? You see the prices moving all over the place, but what are they actually telling you? Well, today, we're going to dive into a framework that's designed to translate all that noise to help you see what's really going on behind the curtain.
So let's just get right to it. Is the market lying to you? I mean, seriously, because you know how it is. Sometimes what looks like this golden can't-miss opportunity is actually a perfectly set trap. That chart that looks so incredibly bullish, yeah, it could be hiding some seriously bearish secrets.
All right, check this out. This is where it gets really fascinating. On the left, you've got the Royal Bank of Canada, just at the open. Pretty standard stuff. But then on the right, boom, it gaps up. Now, to 99% of people, that's a huge buy signal, right? But hold on. If you look closer, an algorithm is screaming strong bearish. So the price is jumping up, but the underlying math is telling a totally different story, that it's weak. And that contradiction, my friends, is what we call a classic gap trap.
So how on earth does that even happen? How can something look so strong but be so weak? Well, that's what we're getting into in our first section here, the market's grand illusion. We're going to pull back the curtain and show you how to see through this stuff.
You know, when it comes right down to it, the biggest challenge when that opening bell rings is figuring out what's real and what's not. Are you looking at a liquidity trap, which is basically just a fake out designed to suck you in, or are you looking at a genuine market move that has some real power behind it? And telling the difference between those two, well, that's the exact problem this whole strategic square framework was created to solve.
Okay, so let's start building this thing out. We're moving on to section 2, which is all about pillar 1, the blueprint. And you gotta think of this as the absolute foundation for everything that comes next.
So, this first pillar is called structure, and its whole job is to define the location of a trade. Think of it like this. Before the market even opens for the day, this thing automatically draws a grid of all the key support and resistance levels. So right from the get-go, you know exactly where the critical battlegrounds are. You know where the floors and the ceilings are going to be.
And I love this analogy from the source material. They call it an architectural blueprint. It's perfect, right? Because price can be totally chaotic, just bouncing all over. But this pillar shows you where the steel beams are, the fixed parts of the structure that aren't going to move. It literally maps out the battlefield for you.
Okay, so let's look at a real-world example. This is Pillar 1 in action on a Brazilian stock, Vale 3. You can see the price gapped up right into what the system calls a selling ceiling. That's that predefined red line. Now, if you didn't know any better, you'd think, wow, breakout. But the blueprint, it already told you there was a solid wall right there. And what happened? The price hit it and reversed, hard. That's what I'm talking about. That's the power of knowing the location ahead of time. But just knowing the location, that's not enough, right? We also need to know the intent behind the move. Is it for real? And that brings us to section 3, and our second pillar, the lie detector.
This second pillar is called sentiment, and its whole purpose is to answer that one crucial question. Is this move for real? It does that by looking completely past what the price looks like it's doing. Instead, it uses a simple numerical score to measure the true raw aggression, or the lack of it, under the surface. It's the cold, hard mathematical truth behind the pretty visual story.
Yeah, the source calls it an algorithmic lie detector. And honestly, that's exactly what it is. It's like a polygraph for the market. When the price chart is shouting, hey, I'm super strong, but the score is quietly saying, nope, total weakness here. The system spots the lie. It's built specifically to find that gap between what things look like and what they actually are.
And this right here, this brings us all the way back to that mystery we started with. Remember that Royal Bank of Canada chart? The one with the big deceptive gap up? Well, this was the smoking gun. This was the piece of evidence the lie detector found. While the price was jumping up and looking great, the sentiment score was a big fat -8. That one little number was the giant red flag screaming that the whole move was a fake out. Okay, so we've got location and we've got intent. We know where and we know why. Now we need precision. So in section 4, we're going to cover the last two pillars all at once, timing and context. These are the ones that tell us exactly when to pull the trigger and what the overall conditions are like. And this slide just lays it out so clearly. Pillar 3, that's timing. It's all about execution. It's the starting pistol telling you the exact moment to go. Then you have Pillar 4, which is context. That's all about the environment. Think of it like your weather radar. It's telling you if you're about to fly into a massive storm or if you've got clear skies ahead.
So let's see the timing pillar in action. We're back on that Vale 3 trade. Remember how it hit that resistance ceiling? Well, right after it did, the system printed this little 0.1 down arrow. Now, this isn't just some suggestion. It's the algorithm pinpointing the exact moment that the buyers ran out of steam. That's your trigger. That's the signal. And then here's the context pillar. This is the NASDAQ 100. Just look at the background color. It's this dark red for the whole session. This gives you what they call glance analysis. You don't have to sit there and analyze every single little candle. The color itself is a constant, simple message. The overall environment is bearish. The directive is crystal clear. Do not buy. It's designed to stop you from trying to swim against a powerful current.
All right, we've got all 4 pieces of the puzzle on the table. So now, let's put them all together in our final section. Section 5, the strategic square.
So, let's just run through them one more time. The 4 keys. Number 1, you've got structure, which gives you the location. Number 2, sentiment. That reveals the intent. Number 3 is timing, which gives you the signal for execution. And finally, number 4, context, which defines the entire environment. See? Each one answers a totally different but absolutely critical question.
And this is probably the best way to think about the whole thing. Imagine a high-security bank vault. You can't just walk up and open it with one key, right? No way. You need all 4 keys: structure, sentiment, timing, and context. And you have to turn them all at the exact same time. If even one of those keys doesn't line up, the vault stays locked. And in this case, that means your capital stays safe.
Now, when you use these 4 keys together, 2 really powerful strategies or protocols start to emerge. First, you have the gap trap. That's what we saw with the Royal Bank of Canada, where what you see visually is totally contradicted by the math. And then you have its opposite, the trend lock. That's what we saw with the NASDAQ, where absolutely everything, the visuals, the math, the structure, it all aligns perfectly.
So let's just quickly break down that gap trap protocol again. The market gaps up and it looks fantastic, but the bias score, the math, is negative. It's weak. So the system immediately flags this as a fake out. And because you see that, you don't take the bait and your capital is protected. It's simple, really. And that Royal Bank of Canada trade was just a textbook example.
And on the flip side, you have the trend lock. Now, this is the beautiful one. This is when everything lines up. The structure, what you see, and the math are all pointing in the same direction. With that NASDAQ 100 trade, we had a gap down, we had that big red cloud for context, and we had a strong negative score of -11. When you get that kind of alignment, it just creates this incredibly high probability, super low stress environment, where really selling was the only thing that made sense.
So when you put it all together, what you end up with isn't just, a couple of indicators on a chart. It's a really robust analytical engine. And what's cool is that because this whole thing is based on universal market logic, it's not just for one market. We saw it work on completely different international markets: Brazil, Canada, the US. It works because it forces what you see to team up with what the math is actually saying.
So, that really just leaves us with one final question to think about. We've just walked through how a really solid, robust analysis needs these 4 interlocking pillars to confirm any idea. So, the question you've got to ask yourself is, when you're out there making your own decisions, are you trading on solid ground?
This is the brief on the Strategic Square Algorithmic Market Analysis System. So, what is it? Well, it's a system built on future simulated market data, and its whole goal is to take emotion right out of trading. It basically replaces deceptive price charts with strict, cold math. All right, let's get into the 3 key takeaways. First, the whole thing is built on 4 pillars that have to agree. You've got structure, which defines your location support versus resistance. Then there's sentiment, which defines the intent. Is it a real move or a trap? Timing handles your execution. Enter now or wait. And finally, context defines the environment. Are you in a trend or just chop? Second, the system uses what they call a lie detector. It's a special scoring engine, and this is absolutely crucial for its gap trap protocol. So, for instance, Royal Bank of Canada stock could look really strong with a big gap up, but the system might generate a bearish score of -8, correctly flagging it as a failure. It's designed to protect your capital from those visual traps. And finally, when all 4 pillars align, you get a trend lock. This creates a really low-stress environment to trade in. Picture the NASDAQ 100 gapping down with a red volatility cloud and a consistent negative score. The system validates that as a safe play area, telling you exactly where to execute your strategy. The strategic square unifies market logic across all 4 pillars, making sure every single decision is based on quantitative confirmation, not guesswork.